All right, yes, perfect. So first of all, before we start, I want to go over a few things right here. With the first thing being is that this is the outro of the analyst phase. Now, I always need to remind people as well that the outro doesn't mean that it ends here. Because again, this is only the beginning. This is the first week of this enrollment. This is only the beginning. And the first enrollment, if this is your first enrollment, then that also means that this is just the beginning. So that is very important to understand, where in execution, analyst is the foundation of actually the execution phase. Because if we look at the foundation levels, then we have 1 bias, 2 narrative, 3 boundary, 4 target right there. 3 and 4, of course, create that context. The majority of the foundational levels right there create what? Is that analyst phase. Only 5 and 6 are for your execution phase. So the majority is, the foundation is about the analyst phase. That is important to understand. Where this week was packed with information. It was packed with information, a lot of information, because it is also the foundation. So order flow is something that you'll see that comes back in the entry pattern, comes back in our risk management. So basically, we have just gone over all the concepts that we needed to go over right there in order to understand the execution phase, in order to understand the MMP week, etc. Because now we understand almost all the concepts and we can build on that. Now, it's important to understand as well, if you have a basic understanding right now of bias, narrative, boundary, and target, so you can define it. If you can define those right there, then you are doing amazing. Now, understanding what is a bias defined, that is again the direction. So are we bullish, are we bearish? Narrative, what is that? Well, if we are going higher, where are we going higher from? If we are going lower, where are we going lower from? So how are we going to deliver towards our bias, towards our drawn liquidity? Then we have a boundary. That boundary is again very close related to the narrative. It goes hand in hand with the narrative, because the boundary is also where we are going lower from. If we are going lower, where are we going lower from? That creates the boundary. The boundary is again where you want to look for that entry pattern. But before you go look at your entry pattern, because you have that boundary, you create that context. You already know your target before you even get to the entry pattern. So the target right there is the 4th foundational level, and that is again just the context, the opposite context, the context high or the context low, what you are going to target. Which overall right there, the bias, narrative, boundary, and target creates your top-down analysis. And that is exactly what we are going to go over today. Now, in the previous enrollment, I also went over a top-down analysis video. That was actually one of the first top-down analysis video that I made, where I truly defined on how I go over my top-down analysis. You don't need to watch that video. So if this is your first enrollment, don't watch that video until you fully finish this enrollment. With fully finishing, I mean you have watched the last video of the MMP week, the 4th week. In the meantime, don't watch anything. So if you have already watched that enrollment, because this is not your first enrollment, then understand that that top-down analysis video is still accurate, but I'm going to define it a little bit more here. I'm going to refine it potentially a little bit more here. So you can sort of see which top-down analysis do you prefer. Pick the one you prefer, stick to it, I would argue, because they both get to the same outcome. They both get to the same point. So don't worry in that regard as well. So, top-down analysis, what do we actually start with? I have 3 rules that I want to go over before we actually dive into the chart itself. The first rule is the closest PD raise on any time frame. So I'm just going to note the closest PD raise on any time frame. Then we have number 2 right there, FVG to work with. FVG to work with. It's the second rule. Then we have the third rule, which is context on any time frame again. So we have the first one, closest PD raise on any time frame. Second one is fair value gap to work with on any time frame. Then we have context on any time frame. So what does that look like? Well, for a top-down analysis, the first thing I do is I go over the dollar and I start on the monthly time frame. The monthly time frame is usually what you go over once a month. That's your ideal thing, because the way I see it is that you go over the monthly time frame once a month, the weekly time frame once a week, potentially. Of course, in the meantime, if you're not certain what is happening, let me get a reminder again. Yes, of course, you can check it. But that is your minimum. You go over the monthly time frame once a month, weekly once a week, daily once in a day, 4 hour every 4 hour, 1 hour every once in the hour, 15 minutes every 15 minutes, 5 minutes every 5 minutes, 1 minute every 1 minute, for example. Now, we are going to stick to currently the 15 minute, 1 hour, 4 hour daily, weekly, and monthly, because we are slowly transitioning as well into different trading plans. Because if you are going to focus on multiple pairs, so if you are prepared to focus on multiple pairs, etc., you are going to be focusing on the time frames of 4 hour daily, weekly, and monthly. If you want to focus on more price action, so you want to focus on one singular pair, and you want to mainly focus on 1 or 2 instruments at a maximum, then you can also use the 15 minute and the 1 hour in your top-down analysis. But it is important to understand, again, the more pairs you are going to use, the more of the higher time frame you are going to be reliant on. As in, if I focus on a lot of pairs, then going into all those pairs on a 15-minute time frame is first of all going to take a lot of time, a lot of focus, a lot of energy. I'm likely going to force IDs as well, because the lower you go on time frames, the likely you are going to more so force IDs. So the more pairs, again, the more pairs you want to trade, the more pairs you want to analyze in your analyst phase, you should stick to the 4 hour and above, the higher time frame. If you focus on one pair, one instrument, or 2 instruments at a maximum, then you can also go into the 15 minute and the 1 hour for your top-down analysis. That is very important to understand. So that might not make a lot of sense right now, but once we get into the trading plans, that will make a lot of sense. So please write that down as well. The first time frame you start on is the monthly time frame. Always. Again, that is once a month, you look at the monthly time frame right there. Then understanding as well, if you are, and this is how I go about my top-down analysis, of course. So I'm just sharing my top-down analysis here. But the first thing I do is I go over the dollar. I look at the dollar on what it wants to do. Does it want to continue higher? Does it want to continue lower? Now, I have also looked at the bonds in the past. So if you're a previous enrollment member and you've already watched multiple enrollments, again, I'm not going over the bonds right here because I feel like the dollar could definitely be all you need. So we're refining that a little bit again. Again, you don't need to know what the bonds are if this is your first enrollment. Now, right here, I first go over the dollar because understanding the dollar is understanding the rest of the market. Everything is based around the dollar. Now, on an economic level, again, that is because the dollar is just the number one currency in the world right now at this moment in time. China might be coming, but that is currently the number one currency in the world. So everything revolves around the dollar. America is currently, at this moment in time, correct me if I'm wrong, it was always the number one economy in the world. So everything sort of revolves around the dollar right there. So if the dollar is going higher, then all the other currencies are just simply going lower. If the dollar is going higher, then the indices are also going lower. If the dollar is going lower, then indices and the other currencies are simply going higher. So if we understand one single instrument, which is the dollar, then we understand a whole lot of pairs and a whole lot of instruments by just looking at the dollar, which of course makes it a little bit easier overall and saves us a lot of time by not looking at the other pairs, etc. So right here, I start off my analysis for the dollar. Now, if I do look at the dollar, then the first thing I do is also understanding that if I'm trading the dollar and I'm looking actively at the dollar, then I look at US dollar pairs. So looking at US dollar pairs right there is these pairs mainly right there. Nifty, no. Nifty at the bottom, it's on the forecast list. Is it involved with the dollar? No, it's not involved with the dollar right there. At least not a direct, not as much a correlation as the rest of the pairs and the rest of the instruments, but it is on the forecast list right there. Crosses, for example, right there is what we're going to go over later on. So this is not relevant right now in this week. So the dollar right there, focusing on the majors, the indices, Forex right there, the metals. That is mainly what you want to be focusing on as well. So there is a list for these pairs right there beneath this video as well. And you can simply duplicate the watch list that I have right there. Now, if we want to understand the dollar, how can we go about that? Well, the first step is again, closest PD raise. So what do? We mark the closest PD raise. Well, the first PD rate that I see at this moment in time is we have this order block right there on the monthly time frame. All right, that's the first PD rate. That's the discount rate that we see. Are we respecting that at that moment in time on the monthly time frame? Not really. Okay, well, we have this next discount rate that is sitting right there as well. So that potential swing low on a monthly time frame. All right, and we have potentially this right there. We have that previous month's low. All right, perfect. So I want to refine currently my ID and my overall analysis towards this low right there. And the reason for that is because that is the closest one. On a monthly time frame, it's going to take a while before we actually deliver towards this low right there. So the first target is overall this potential discount rate. Do we have a premium rate that we can target? Well, potentially this high. That's the closest premium rate that we have at that moment in time. We have no Verwijgap lower just yet. This is the closest premium rate. That also leads us to understand the Verwijgaps we are working with. That is the next step, the Verwijgap to work with. Because the Verwijgaps to work with right there is understanding that we had a bullish Verwijgap. That bullish Verwijgap, is it getting respected currently? No, so we might reach for a lower discount rate. So the lower discount rate that we, again, the first one we are going to reach is the previous month's low right there. We don't have a bearish Verwijgap just yet, but we can see that a bearish Verwijgap is potentially in the making. Now, for us to create a bearish Verwijgap, we should not trade back towards that high, of course, right? Because then that creates the expansion phase of a fair value gap right there. So that, with the first two steps, that right there is my thought process on the monthly. The closest PD raise, all right, Verwijgaps to work with, perfect. That already tells us everything we need to know right there. Now, of course, when you're just starting out, this is going to be a little bit harder. As in, it might take you a little bit more time than how fast I do it. But that is completely normal because I did not get here by knowing one or two things and then just all of a sudden magically understanding this and doing it within 5 seconds. No. I can, and I've told this before in previous enrollments as well, I can do an analysis on a certain pair in 10 seconds if I want to and understand where it wants to go towards because I have the experience to do it. That's not me bragging. Don't believe me. It's not me bragging, but it's understanding. There has been a lot of chart time for me. There's a lot of experience behind what I'm doing, etc. So it's important to understand that for me, it might seem very easy for me to get to a top-down analysis, etc. For you, it will become easy as well if you stick to it, if you give it time. That is very important. Now, the next thing is that we need to create context because, of course, currently we have established a bias. Basically what we've done, we've just understood a bias because the bias is that direction. The direction, what is the direction again? Well, we are trading towards something, right? Because either we're bullish or bearish. So what are we actually trading towards? Well, overall we're bearish right here, which is again, just simply told by the Verwijgap. Verwijgap higher getting disrespected, Verwijgap lower in the making. Bearish, perfect. So right there, what can we target? What is the direction? Bearish, we target a discount rate. What is the first discount rate that we encounter? This low right there, the previous month's low. So the way I see the 1 to 2, 1 to 3, as in the closest PD rays, the Vervij gaps to work with, the context is not necessarily that it's a full checklist, but those are simple sentences that get your mind going, that get your thought process going. Where if we are going lower from, or if we are going lower, where are we going lower from, is such a simple sentence. And it's not that that is a full trading plan on its own, but that simple sentence right there already tells you a lot, because it's a sentence, it's a question that you ask yourself that sets up a lot of similar thought processes, where all of a sudden you start thinking, well, if we are going lower, where are we going lower from? Oh, let me refine that order flow. Let me refine the context. What is the target again? What is this again? So it sets off a lot of chain reactions in your mind. And that makes the top-down analysis so strong, because with one simple thing that we mention, there's a lot of meaning behind it. So if you truly start to dive into it, if we are going lower, where are we going lower from? Aha, okay. Then I need to understand boundary. I need to understand the narrative. I need to understand context. I need to understand Vervij gaps. So behind that one question, there's a lot of understanding behind. There's a lot of meaning behind it. It sets off chain reactions in your mind to create questions, to create that checklist automatically. That is what we want to do right here, without having to write down, well, if you are going low from this, then what are we doing? What is the bias? What is the narrative? What is this? What is that? No. Just one simple sentence. So again, we have gone to the conclusion what the bias is overall. We have come to a simple conclusion, or a very basic conclusion of what the narrative might be. Because we understand if we want to create that bearish Vervij gap, we should not come back towards that low right there of that candle, because that will invalidate the Vervij gap that is potentially being created right there. All right, so we have refined a little bit of where we can go lower from, right? Because right now we are going lower from an area somewhere in there. Do we have a premium rate already on the monthly Vervij gap, on the monthly time frame? No. So what do? We go down a time frame to look at potential context again. Do we have context on the weekly? Yes, we potentially do. We have a weekly Vervij gap sitting right there, which is the closest PD ray. Then we have this weekly Vervij gap right there as well. And we still have this target. So the target is pretty clear already. The target we don't really have to worry about anymore. We are now just looking at, all right, where are we actually going lower from? Which creates the third one, which is context. So what is the context on every time frame right there? Now, we have potential weekly context. Is overall, this is where the other concepts come in, is it supporting the idea of trading into the weekly Vervij gap to potentially continue lower off of that? Well, yes, because we have a pretty high close right there. So yes, for sure, we can definitely look to come into the weekly Vervij gap, potentially to continue lower off of that. So that creates right now context. So it's also understanding that once we already have that context on the first time frame you find it on right there, you would not necessarily go into the lower time frames right now, because there's no reason to it. Because if I go into the daily, if I go into the 4 hour right there, and we create this 4 hour Vervij gap low right there, yes, I understand that this is context. We can go lower off of that. Is that high probability? No, because you have a weekly Vervij gap hovering above your 4 hour order flow leg right there, which makes the 4 hour order flow leg already lower probability. That is important to understand. So right there, if this of course wants to hold, then eventually we react, because a top down is also about adapting. It's constantly reacting and adapting throughout the week. So what might happen on Sunday, or your top down analysis on Sunday, might be completely wrong. As long as you understand, you don't set the expectation consistently for all right, I'm expecting this and only this can happen throughout the week. Yes, that is a great way to approach it, because you're setting yourself high probability standards. Because when you expect something off the market and it plays out exactly like that, that is extremely high probability for the market to do, because you already have planned it out in your mind as well. But if you're not able to adapt and you're not able to read price action with an open mind, where there are clear signs on that we might do something else, that is going to be detrimental. That is very dangerous. So again, keep that in mind as well. Yes, we are doing a top-down analysis on Sunday where we are going over the market and we look at everything that we need to look at. But it is important to understand that we still go into the week with an open mind. That's important. So right here, this is not a 4-hour VWAP gap you want to trade off of. So again, once you have context on the first time frame you encounter. So monthly, we didn't have context. Weekly, we had context. Perfect. Then I don't go any lower in my time frames. Now I have two things that I have to work with because we are in between two PD rays. We have this target that we had established and we have this weekly fair value gap that is sitting right there. Perfect, because that right now tells us what? That tells us that currently we can look at potentially if we want to trade. And this is where the trading plan comes in. We can look at the lower time frame, at the 1 hour, at the 15 minute to see where the fair value gaps want to guide us towards. That is very important. Where do the fair value gaps want to guide us towards? First to the low or first to that fair value gap right there. Now, if you are trading a filtering process trading plan meaning that you are trading multiple pairs, not necessarily trading multiple pairs, you are analyzing multiple pairs before you decide to choose a pair that you want to trade. So you always analyze multiple pairs if you have a filtering process trading plan. Then this is where you would now stop. This is where your analysis is basically done. If we want to continue lower, we can continue lower off the weekly value gap. In the meantime, throughout the week, I will react if that doesn't happen. But this is where your analysis for a filtering process trading plan is done. And that's important to understand. Where a flow trading plan, we can still look to continue. Now, that leads me also to the next point, where if you are going lower in time frames and lower in time frames right there, then you also need to understand that you don't want to go lower than the 4-hour time frame on the dollar. So I mentioned a little bit earlier in this video that you can use the 1 hour and the 15 minute if you are deciding to trade a flow trading plan where you focus on one single pair, one single instrument. Then it is important to understand that the dollar is just to give you a general idea. It's just to give you a general idea of what the overall market wants to do. So if you are trading and you want to trade, for example, Euro US dollar, then do not compare the dollar throughout your trading with Euro US dollar. So trade what you see on Euro US dollar at that moment. It's just the dollar is just there to help you understand the bias overall, to help you understand where we might continue lower from, when we can continue lower, etc. But if you go below the 4-hour on the dollar, it's going to be extremely confusing, and it's not going to be any beneficial. That's very important to understand as well. So stick to the 4-hour and above for the dollar. The dollar, again, is just to give you a basic idea of what the overall market wants to do. So right here, if we do take a look at the daily, then of course we can see, well, we might want to continue higher off of this daily value gap than into the weekly value gap right there, which again creates that context. Closest PD ray, daily value gap towards this weekly value gap right there. Again, this is where the story does get interesting overall, because if we start to respect this right there, then we can look to target the weekly value gap potentially. Again, remember what I said, for a filtering process, you would already be done at this moment in time. So that is also important to understand. Now, we understand currently that overall, the dollar coming into this week is just likely going to be bearish because the bias was bearish. So we understand that. The narrative is again, when the dollar wants to be bearish right there, that is when we can look at more specific price action potentially. But we understand overall the dollar here is bearish. So right now, what do we do if we were to go into the other pairs to potentially look at a pair to trade? Let's go take a look at Euro US dollar right here. And let's again start on the monthly time frame. And we start very simply. A top-down analysis is actually, and I don't want to rant too much, but a top-down analysis is quite simple. Might not be easy because the concepts to lead you to that simple process might be a little bit difficult to understand. But the top-down analysis itself is quite simple. It's quite simple. It's a very simple process overall. And again, that is coming from someone, so I have a very biased opinion, that's coming from someone that has been doing this for a long time. So again, who am I to judge? But for me, at this moment in time, with that experience, which is also the point you will get to, it becomes quite easy. So let's mark out the closest PD rates again, where here on Euro US dollar, we can see is basically the inverse thing of what the dollar is doing. So the analysis that we did on the dollar already becomes quite easy right now on Euro US dollar, where we can see, all right, we have this previous month's high as well right there. We have the same swing low, and we have the same where we are currently not respecting that monthly Verweij gap. So it's the same exact thing right there. So now we can go into the weekly to again look for that context. The context right here, what do we have? We have weekly context where the Euro US dollar is already inside the weekly Verweij gap. It already came into the weekly Verweij gap right there. Did we close inside the weekly Verweij gap? No, we did not. But if we go down a single time frame on the daily time frame to see what is going on, then on the daily time frame right there, we can see we did come into it late during the week. Now, at this moment in time, would you expect a sweep right there of this low? Based on the respect? Not really. Based on what the dollar can potentially do, as in, if the dollar wants to continue higher a little bit right there towards the weekly Verweij gap, then of course your US dollar might still come a little bit lower right there to then continue higher. Because again, everything is based around the dollar. Whatever the dollar is doing is what we need to understand. Now, you don't want to get too crazy with the comparison, as in you don't want to go below the 4 hour with the comparison. So the 4 hour and above is where you can take that into account, etc., where you can get a little bit more accurate overall. But if Euro US dollar already presents a setup, then you would just take that setup right there. So again, understanding that for a flow trading plan, for a filtering process trading plan right there, if we are to continue higher off this weekly Verweij gap, this is where you would also now stop your analysis. This is where you start looking at a potential entry pattern right now, or a 4 hour Verweij gap higher to look for an entry off of that on the 5 minute time frame. Which again, this is also why we need to understand execution first before we can actually do a proper top-down analysis eventually. That is also quite important. So right here, off of the weekly time frame and the weekly Verweij gap right there, we can continue higher and we have this context right there. So we have context, nice. On a daily, do we have context? Yes, because on a daily we have potentially bearish context right there with also potentially bullish context with sweeping that low. But we have mainly the most recent price action bearish context right there. Which one is likely going to win here? The weekly Verweij gap is, of course, higher than the daily Verweij gap, as in the weekly time frame is higher than the daily time frame. So the weekly time frame is stronger. So the weekly Verweij gap is likely going to win at this moment in time. So that is also important to understand, that you can still expect a rejection right there, but you would not expect all the way new lower prices most likely, just simply based on probabilities, simply based on understanding the fact that the weekly Verweij gap is stronger overall. So right here, let's continue with a flow trading plan and as well a little bit filtering process, because we already came into the weekly Verweij gap. So now, of course, we need to see how we can potentially look to get involved as well, which is, of course, adds on too nicely for the execution week that we are about to have. So here on the 4 hour, do we have any context on the 4 hour? Well, on the 4 hour, we can see what are the closest PD rates. We have this high right there, but it's the same as the daily premium rate that we had right there. Then we have this low as well, but again, that's the weekly Verweij gap. So currently, we are coming off of this weekly Verweij gap that is sitting right there with a clear path towards this daily fair value gap right there. So this area that is sitting right here is the first very clear no resistance area where we can expect a nice push into the daily fair value gap right there, because that is the first very clear drawn liquidity. Because if we are going higher, then we are going higher off of this weekly fair value gap right there. If we are going lower, then we are going lower off of this daily fair value gap right there, which means that at this moment in time, we have this area of basically no resistance, where this area towards, once we reach the daily fair value gap, it becomes a different story. But once before we reach that, that is where we have such a clear draw on liquidity in the form of just that daily fair value gap, which is of course very interesting. So here on the 4 hour, do we have any context? No, not really. We have a very small fair value gap. Again, I do not use small fair value gaps, and the reason behind that is again what I've also explained in a fair value gaps in-depth video, because the broker is not universally agreed that that is a fair value gap. So right here, if we go into the 1 hour, what do we see? We have bearish fair value gaps getting respected. Coming into the weekly value gap, we're getting a rejection higher. And then right there, we see a bullish fair value gap getting traded into. So now we have a pretty clear path potentially towards what? Towards this daily fair value gap right there. So do we have 1 hour context to work with? Well, we are in the middle of 1 hour context actually. So if we are in the middle of 1 hour context right there, and this is again, can also be on different time frames, then right now, would you go into the 1 hour to look for the entry or into the 1 minute? Not really anymore. So you would now look at the 15 minute. Do we have 15-minute context? Well, we are potentially creating a fair value gap higher. If we create that fair value gap higher, that could be very interesting to then first target this high that is sitting right there. And then the next target could be that daily fair value gap again. So all we are doing right here, and I hope this is pretty clear as well. And again, if it's not, then you're going to have a lot of forecasts. You're going to have a lot of other context videos, and you are going to have a lot of top-down analysis videos as well, where we go over this. So don't worry. But all we are doing right here is we're constantly looking at context on every single time frame. What is the context? What is the context doing? Which again, that context is just very simply said, it's order flow. So we're constantly looking at what is order flow doing. We're looking at, relatively seen, what are the recent lags doing? What is the recent lag doing right here on the monthly? It's potentially continuing lower right there, but we're not respecting that fair value gap. So the fair value gap right there is the greater argument because it's a superior PD rate. So that takes into account, right, we're potentially creating bullish order flow right here. All right, interesting. On the weekly, what is the most recent lag doing right here? Fair value gap, most recent lag right there. Daily, what is the most recent lag doing right there? Fair value gap. All right, what is the most recent lag on the 4 hour doing right there? Not a fair value gap, don't count that fair value gap. Perfect. So what is the most recent lag on the 1 hour doing right there? Where is it pointing towards? So this is how, again, that relativity theory that we had on every single time frame, that is different. The order flow is different on every single time frame. This is the exact same thing that we are talking about right there. And that is all you would do for your top-down analysis, which all it comes down to is, again, the closest PD rates, because that leads to your bias. That leads to your draw on liquidity. What discount rate, what premium rate do you want to trade towards? Then the next one is the fair value gap to work with. So what are the fair value gaps overall telling us? Which recent fair value gaps do we have in the most recent lags? And then we have context. All right, understanding that we have a bias. The fair value gaps are telling us a certain story on what they want to do. The context is right there to now understand, if we are going higher, where are we going higher from? If we are going lower, where are we going lower from right there? So the full story right there is told by first closest PD rates, because that tells you the bias, the direction, where can we trade towards. Now, just the PD rate, of course, doesn't tell you just marking out the PD rates doesn't necessarily tell you where we are going towards. This is where step 2 comes in, the fair value gaps to work with. Because the fair value gaps tells us right here that the most recent leg had a bullish fair value gap, disrespecting bearish fair value gaps. So overall, we are bullish right there. The direction is higher. So then we can look, well, then we are targeting that closest pre-D ray in the form of that swing high. That also creates our context. So if we are going higher, where are we likely going higher from? And that creates your top-down analysis. So this, of course, takes practice. So feel free to do a forecast of the coming week right there. And then afterwards, you are allowed, at this moment in time, you are allowed to watch the Sunday weekly forecast that I am also going to create. Understanding that I would love for you to only watch that forecast and only watch that forecast and then afterwards come back to the enrollment videos. So only watching that forecast, not watching any other forecast, only watching that forecast for that Sunday. That's it. And then that will also help you in determining, all right, is my understanding of price action pretty close, or am I getting to the same drawn liquidity as Ario? Why not? Again, doesn't mean that your drawn liquidity is wrong and mine is right? That doesn't mean that at all, because I could very well be wrong as well, and your drawn liquidity might be right. But if we can get to the same drawn liquidity and you can creep into my mind, that again gives you that idea, hey, I'm on the right path right here. I'm doing great. And that is what we are looking for. So I am going to look right here at one random pair, at a random pair in the list right there. All right, GU, no, I'm not going to look at GU. And the reason for that is because EU and GU are basically the same. I don't want to look at GU at that moment in time. Let's look at, I'm going to close my eyes. Let me do like this. Perfect. Let me do it like this. Perfect. USD-JPY. So let's see what we are doing right here. Now, on the monthly time frame, again, what are the closest PD rays that we can look to target? Well, the first PD ray that I already noticed that we have not traded into is this previous month's low right there. Or have we traded? Yes, we have traded into that. All right, still interesting. Let's keep that marked up right there. So then the next discount rate that we have is, we don't have a fair value gap. It's that swing low on a monthly time frame. Now that is very far. I'm going to mark the previous month's high, which is that swing high potentially. Overall, not a clear, on the monthly, no clear PD rays that we can work with here. All right, perfect. When this happens, what you would do is then you can just go into the weekly time frame to see if the weekly has a clear view of price action. So we can go into the weekly right here. See what is the weekly doing. All right. Well, the weekly here is potentially creating a bearish fair value gap. The bearish fair value gap right there, again, would require us to not trade above this low right there. That is a pretty small area overall. Will that happen? Well, that is not very likely. But we can get to a clear drawn liquidity right here because we have this swing low that is sitting right there. So overall, that is a much more clear drawn liquidity than we had on the monthly time frame. And it's nice and close as well. That is very nice. We can also remove the high overall right there. All right, so right here, let's dive into the daily to get a more clear view as well. On a daily, we can see that we are very interesting. Let's not get ahead of ourselves. Let's mark out the close PD rays. Swing high right there, and we have this low that we took. So now in this moment in time, I would just keep the weekly swing low that we had right there. All right, perfect. So here, this becomes quite interesting right now. Can you see what I'm seeing? Because if we now look at the fair value gaps to work with and we look at the context, then we see we had this daily fair value gap that was getting respected and coming off of that order block as well. Then that can follow through to create now what? A new daily fair value gap lower potentially to target the weekly swing low that we had right there. So that is quite interesting overall. Now, if we were to continue lower right here, then we should ideally already continue lower because that ideally that helps us to create that new fair value gap lower as well. And this is again that weekly fair value gap low, or the high actually of the potential weekly fair value gap that we had right there. Because if we trade back into that, there's no weekly fair value gap lower being created, which of course stalls the intention a little bit. Now, this for a filtering process, I hope you can see this as well, that this was a little bit tougher to get to a drawn liquidity, to get to a trade ID. So this for a filtering process would just be, and for flow trading plan as well, but for flow trading plan, of course, if you're only trading USDJPY, it's a different story. If you have a filtering process where you can choose from certain pairs which one you want to trade, then this right here is not what you want to be trading, right? Because Euro US dollar was already way nicer, way higher probability. Did you notice how easy it was to get to a story on Euro US dollar? Here it was like, we can do this, we can do that, don't really like it. Euro US dollar was, all right, this, all right, the next light bulb, oh, perfect, we're doing this. Here it was a little bit more difficult. So right here, if we do go into the 4 hour, for filtering process, I would not look at this price action right here. But for flow trading plan, we can utilize the 4 hour and the 1 hour right now, where we look at this. If we are going lower, well, we are definitely going lower off of that 4 hour value gap right there. All right, that is quite nice. I don't like the fact that we aren't creating daily value gaps and weekly value gaps then potentially lower, but I do like this clear 4 hour value gap. So for a flow trading plan, this is also the moment where I would stop, because that 4 hour value gap right there is enough. It's enough to understand what we potentially want to do, because then we can trade lower off that 4 hour value gap. That's all you would wait for at that moment in time. So here in the 1 hour, there's no real benefit to go into the 1 hour because you have the same fair value gaps right there. So the 4 hour is just the one you would want to use. So right here, this is again where we can continue lower from, with the weekly swing low that is sitting right there as a potential target. All right, that's quite nice. Then we would definitely expect this 4 hour value gap lower to hold, with that high as well to hold right there. If that doesn't happen, then again, we react and we see, all right, what can we potentially do after that? So this is how you go over that top-down analysis again. Now, I also understand that it might be difficult again to go into your own chart and to look for this top-down analysis. Try to follow the steps. You don't have to do it right the first time. It doesn't have to be great the first time. Nobody does it great the first time. It's completely normal. The perfection comes from time and experience, doing it over and over again. Perfection comes from failing a lot of times, from doing it wrong, getting essentially someone helping you, telling you, hey, if you do this, then that might work better. So it's failing. Please fail. I want you to fail. Not in the long run, of course, but you need to fail right now. You need to take punches to learn how to box, and you need to take losses in the market to learn how to trade. So that is very important. And again, that is the reason why I say I want you to fail, because don't be afraid of that failure. Don't be afraid of that failure. Now, don't go seeking for it. Always try to do your best, but you are going to get punched in the face. As in, you are going to take a hit in the market. You're going to take an ego hit or a loss, potentially, eventually when we get into execution phase, etc. You're going to get hit. Whether it's mentally or that's well, not physically, definitely not physically. I'm not going to hit you, don't worry. But that can also be, again, an ego hit where your analysis is wrong. Because an analysis being wrong is just an ego hit. It's just an ego hit. That's it is. Every time you do an analysis, a top-down analysis, and definitely when you tell it to someone else, it's your ego is a little bit on the line. Because if it's wrong, your ego is going to get a little bit hurt. Whether you want to admit it or not, your ego is going to get a little bit hurt. And there's nothing wrong with that. As long as we understand there's nothing wrong with being wrong. There's nothing wrong with being wrong. Because understanding if the analysis is wrong doesn't necessarily mean that we lose any money. We just lose a little bit of our ego, but that's it. I can survive that. So that is, again, very important to understand. So please do not be afraid to not understand it. Do not be afraid to fail, potentially. It's normal. It's the process. So do a top-down analysis right here. Follow the Sunday weekly forecast only. And we will see how far your progress is, and we will build onto this ID as well. All right, keep it going. You are doing amazing. You did a great job this week, and I want to thank you for it. All right, perfect. Thank you.